staying on the interest rate changes, Dan, with an environment with higher rates, how they do tend to affect companies differently, increasing their cost of capital. Which type of sort of Australian businesses cope better in this environment and which do really struggle?
In terms of businesses that perform well in a rising rate environment, you've got your banks, which is higher interest rates is typically good for their margins. You've got businesses like insurance companies tend to do better because of the big float that they have, and they earn interest on those funds. Typically, energy and resources and commodity businesses do well if those rate rises are driven by inflation, which is an indicator of increasing demand. And generally, companies that have strong pricing power. We saw this over 2022 and 23, where companies that were faced with higher input costs because of inflation increasing were able to pass those costs through without impacting the overall business. They fared much better than businesses that do not have pricing power. And it cannot pass those cost increases through. And on the flip side, you have businesses first and foremost that have too much debt, and that means higher interest costs, and that gets the business in a bit of trouble. So those businesses tend not to do well. More leveraged small companies that don't have the scale of the larger companies tend to lag in such markets. Businesses that are exposed to discretionary consumer spending, because naturally, as interest rates go up, mortgage repayments increase, and consumers tend not to spend so much on discretionary needs. So that those types of businesses don't perform well as well. And lastly, just businesses that are sort of hard assets like property trusts and sort of utility and infrastructure businesses that their valuations is linked to interest rates tend to lag during those periods as well. And that's the level sort of we go through in terms of looking at our portfolios and on a look-through basis, looking at how much exposure we have in each sector to make sure there's not an overall bias to companies that are going to not to be doing well in a higher interest rate environment.